The trust break, why your grandfather never believed the banks. 1. The Ghost of 1929. Picture this. A line of men in gray coats, shuffling outside a marble bank, October 1929. You can almost hear the panic, the hollow thud of fists on oak doors, the silence that follows when they realize no one's coming to unlock them. That wasn't just history. That was trauma, passed down like an heirloom. Your grandfather stood in that line. What he learned that day rewired his DNA, and yours. The institution he trusted to guard his life savings simply decided not to. The marble, the brass, the unbreakable image, all illusion. When the illusion cracked, the truth came through, the system could change the rules anytime it wanted. So what does that actually mean? It means your uneasy feeling about money, the quiet distrust when you see account balance isn't paranoia. It's memory. In that line, your grandfather buried more than coins. He buried blind faith. Footnote. This section describes the psychological legacy of the 1929 bank runs and how generational distrust of financial institutions began as a survival response. 2. The stagecraft of stability. Banks understood the damage. They didn't rebuild trust, they rebuilt theater. Granite pillars, brass teller cages, marble floors polished to a holy shine. The idea wasn't security, it was the illusion of security. They sold emotion, not economics. The sound of your shoes echoing in that lobby wasn't accidental, it was design. Every handshake, every hushed tone, every immaculate vault door said one thing: you are safe here. But your grandfather remembered those same doors locked shut. He knew the safety was a script. The building was a prop. The real play was psychological, a performance of permanence. So what does that actually mean? It means confidence was the new currency, and architecture was its printer. The banks replaced gold with marble and called it reassurance. Footnote. This section explains how financial institutions rebuilt post-crash confidence through architecture and psychology rather than systemic reform. 3. The gold confiscation trick. Then came Act 2. The government entered the stage wearing a hero's mask. It told your grandfather to hand over his gold, for the good of the nation. Temporary measure, they said. Stabilization, they said. He obeyed. Then, months later, they devalued the dollar. His surrendered gold instantly became worth more, just not to him. So what does that actually mean? It means his life savings were legally stolen, wrapped in patriotic language. They didn't break into his house, they changed the law. That was the real innovation. Legalized confiscation disguised as reform. The message was simple: your assets exist at our discretion. Footnote. This section highlights how government policy during the 1930s removed citizens' gold under lawful pretense, creating the precedent for state-controlled wealth. 4. The Survival Manual. When your grandfather hid cash in a biscuit tin, it wasn't superstition. It was strategy. He'd watched governments rewrite the rules, banks bolt their doors, and money morph into promises. His distrust wasn't fear, it was data. He understood that real wealth is something you can touch, not something you need permission to access. His rulebook was simple. 1. Never trust a system that can change its laws faster than you can react. 2. Never forget that digital or paper money is faith, not fact. 3. Always keep a portion of your worth where no one can seize it with a signature. That wasn't paranoia. That was the wisdom of someone who'd already lost everything once. Footnote. This section describes how generational financial caution evolved into practical self-reliance, preserving control outside institutional systems. 5. The digital bank run. Fast forward to today. The marble is gone, replaced by glowing screens. You don't line up outside anymore, you panic-click inside an app. The modern bank run happens at the speed of Wi-Fi. Your savings are data points, your trust secured by code and government backstops that sound eerily familiar. So what does that actually mean? It means the same old fragility now wears digital clothes. Inflation is the new confiscation, bail-ins are the modern lockout. The rules can still change overnight. The ghosts of 1929 now haunt fiber optic cables instead of bank vaults. Your grandfather's lesson? Still valid. Maybe more so. Security isn't granted, it's guarded. Vigilance is the only insurance that never devalues. Footnote. This section connects historical bank collapses with contemporary financial instability, framing technological progress as a change of form, not substance.